TGIF. Happy Friday. Man, remember TGIF when I was a kid, like Steve Urkel, Dinosaurs, all those shows, Step by Step? If you don't remember it, that's okay. But TGIF, nonetheless, we're going to talk about some real estate things, and job reports came out today. So this is hot off the presses. I won't bore you with the job reports too much, but I will give you a quick overview. Long story short, rates are still trending. The trend is our friend, trending downward. It looks like 6.375 according to Mortgage News Daily. Remember that typically includes some form of a point, give or take whatever that may look like. Job reports came out, guys. In short, it was weaker than expected. So the very top line, let's just look at that. It was estimated at 160, and it came in at about 142,000. The birth death ratio, their model is what they talk about as far as how many businesses were created, how many went out of business. I'm not going to get too much into that because it's kind of boring. But the big part is it was weaker than expected. And also, you can see that year to date, we've had a downward revision of 365,000 jobs. That is a ton. So, for example, June, the original estimate came out at 206 jobs were created. We revised it the first time down to 179, and now it's down to 118,000 from June. So, in other words, in June, they almost, not quite by half, but they missed the mark by saying there were almost 2 times the amount of jobs created that were actually created. So, again, we've been saying this for a long time. The data is starting to prove it, that it has been overstated. The job market's not as good as it should be, which then gives the Fed the green light to cut. We already know they're cutting this, the 18th. What is that? Next week, a week and a half from now, whatever it is. They're going to cut, whether it's a quarter or 50 basis points to be determined. But obviously, more signs like this as unemployment comes in and things like that gives them more of a green light to go ahead and get it done. So, real estate market. There is, as this article talks about, who's in control, the buyers or sellers, the buyer market or seller market. In some areas, the buyers are gaining, as they described it, the upper hand. So these fun little maps, you can kind of see on the left one, the map, the United States, the active listings that were done in July of 2024. You can see, green is, hey, it's up 50%, yellow is down 50%. So look at Florida. It's a lot of green in there. Look at Austin, 39% more listings than compared to 2019. So pre-COVID, fast forward 5 years later to where it is now. So you see that a lot of this, like the Northeast, it's still super brown, meaning there's just, the weight is obviously not normal. So the one on the right shows that by how many buyers outnumber the sellers. As I just mentioned, in the Northeast, like a huge amount of buyers outnumber the sellers sitting in there. So in other words, it's a seller's market. But places like Austin, where the active listings are up, it's not necessarily a seller's market. At that point, it might be a buyer's market. So I just thought this was interesting. Look on the map wherever you want to go. Fewer people are, in fact, buying homes, apparently, despite that high demand we just looked at. So month over month, it's down about 5.5% from July, that is. And then it's down from year over year about 8.5%. So a lot of that, I think, is obviously that rates have just been elevated, although they were once higher about a year ago. It just seems like at this point, I think some of this has to do with a number of factors. It could be that, the rates have been high. We know that, right? Home prices have still been going up in most markets. This is an election year. There is talks of recession, right, with the job reports. So there's just not as many folks doing this. And then lastly, maybe it's the interest rate, right? So I know they've been high, but now that they're coming down, I think that creates some sort of like mentality that folks are going to wait. And again, I just tell you, don't wait. Like this is a great time because as soon as rates do hit in that 5 point something, when they do that, man, it's going to bring a lot of folks out of the woodworks, and that's just going to make prices go again so much higher. So anyway, look, that last line, the last bullet point, consider that nearly 9 out of 10 homeowners have rates lower than 6. So people are thinking, I didn't know it was that high, by the way. But anyway, I don't even know if I believe that, but still a lot of folks are sitting there waiting for that rate to come below 6, where they're like, okay, I don't mind trading my house at a 4.5 or 5.5 to go get a new 5.5. So just understand, a lot of folks may come out of the woodworks if and when rates go down. I thought this was fascinating. I had no idea, but somewhere in Missouri, there is a place called Baldwin, and Baldwin, Missouri is the second hottest zip code in 2024. But apparently they have a zero property tax policy, zero property taxes. And they've done that for 37 years. So good for you, Baldwin, Missouri. But here's the list on the right, hottest places, which none of which are in my backyard. So boo-hoo. But those are the hottest places, apparently, the hottest zip codes for 2024. Parker County, going local. I talked to a bunch of folks from Parker County this week for some reason, so we're just going to highlight it. This is the forecast appreciation. You can see what it looks like for the next 5 years. This has been using the average for where it is now. If the median home price out there, not the average, but the median, like there's a difference, but let's just use it for the middle house sold of all these, sample taken is about 420,000, 5 and change. If you average the 2%, which I think is conservative. I mean, right now, again, I know that it's not booming right now in Parker County, but it was. But if you just use an average of 2%, check it out in 5 years' time, you've made yourself close to $50,000 in equity, 44,5. So that's the part to say, like, buy now, because over time, I think that 2% is going to heat back up when the area does pick up, because it is slow out there. There's no question. But I think that's the part that's just super interesting. And on the right side, you see what the average has been for the last 5 years has been 6. Yet on the left side, you got the 2% that we're using. Some more about Parker County. Homes being built, it's about 760 per year, apparently. Demographics by age. We've always said that middle 30s, whatever it was, mid 30s has been somewhere around the home buying age. And you can see that most of them are between that 27 through 54. It's kind of been that millennial Gen X type folks buying homes. Median income is about $102,000 out there. That's a lot. It's almost double, not quite, but almost double the national. So we'll start highlighting more local areas like that. Mortgage originations. This is just showing that they are slightly on the increase. Homebuyer down payment. Typical homebuyer has put down 18.6%. This is up from 15% a year ago. Again, people are probably putting down more house or more money because, one, they sold a house that had a lot of equity, or two, just to kind of, balance out the higher prices and higher interest rates. And 3 and 5 homeowners put down more than 10%, which I thought was that's a all-time high on the amount of folks doing that. Long story short, it takes about 80 grand. I know we're about to get done wrapping up here, but the starter home, it apparently takes about 79 and change for a household to buy a home. And that's just a lot of money. That stinks. It is what it is, but that's the newest stat that I saw. And lastly, have some fun. Kroger. I don't agree with this, but apparently the government's after Kroger because they what they call it? They called it gouging. They increase like milk, egg, sugar, banana, stuff like that, even iceberg lettuce. And supposedly they got some sort of electronic price on things where during like peak shopping time, the price can go up. I don't know. I'm a capitalist. If you don't like Kroger for doing it, go somewhere else. If Kroger's convenient and it's great, and they can charge more and you want to pay more, good for them. But okay. Things are apparent. I saw this and there were 2 or 3. I highlighted the 2 that I thought were most funny that I kind of remember. I remember as a kid, my dad told me the last one, police would pull us over if I turned on the lights in the car. Absolutely believe that. Didn't know that. So even now, my kids are like, don't turn it on at night. It's truly just because I can't see sometimes. And then the third one, swallow gum, it'd stay in your stomach for 7 years. I still think that's true. Who knows? Beyond that, guys, this is an inflation joke. The Fed introduced a new $1 bill showing the 20. That's a smart joke. May not be the funniest one we've ever had, but that's a smart joke. As always, share, subscribe, like, do all that fun stuff. We appreciate you as always. Enjoy your weekend.